Do you live or own real estate here in Central Florida? If so, you're going to want to stick around to hear about my database predictions for the West Volusia real estate market in 2022 and hopefully dispel some myths that I read and hear about. I'm Chuck Shaver with the Shaver Group at Keller Williams Heritage Realty here in Central Florida, and I'll be providing some data to show where we've been, and maybe more importantly, I'll be showing you where the market is going based on that data. The median sale price at year's end was about $275,000. That's an increase of around $2,000 in the last month and $20,000 in the last 6 months, and an increase of almost $41,000 since January. The steady march of prices just keeps on marching. When will this end? Yes, well, it will end, but I'll address that a little bit later on. The selling price to original listing price ratio remains at 100%, and that really hasn't changed since back in March when it was still well over like 99%. What this tells us is that the buyers are willing to pay an average of 100% of their asking prices. To me, this is a key stat to show the real strength of this seller's market that we're in. Those of you that were here with me for last month's market update heard me lament the 33% increase in days for a seller to get a contract. However, this has decreased once again, and now it's taking a seller about 7 days to get under contract. Remember that this number includes those unmotivated buyers that have had their properties on the market for like years. So it's an astonishing number to me. This is actually a bit lower than it was 6 months ago when it was taking just 5 days to go under contract, but it's still faster than the 10 days it was taking back at the beginning of the year. At the end of December, there were just 398 homes for sale here in the West Volusia market. That's a massive decrease of inventory of about 19% in just 1 month. But some of this can be explained away as buyers work to get their homes closed in the 2021 calendar year to be able to capitalize on the homestead exemption. This, of course, keeps their property taxes lower. This number is actually down from the high this year of 526 back in September, but it is up from the 345 that were available back in April, when I believe was the peak of the market. Freddie Mac's interest rate at the end of December was around 3.25%. That's up about half a percentage point from the first of the year. You can see in the graph that although the rates have bounced around a bit this year, the trend is certainly upward. I recently heard a talking head predict interest rates of around 8% before the end of 22. While this could happen, there really is no data supporting an increase of this magnitude this fast. So I believe that everyone just needs to take a breath, take a chill pill, and be careful to avoid the panic in the streets. Although there is little debate amongst the experts that the rates will rise, the discussion really is more of how much they will rise. While changes in the interest rate might seem minimal, I've heard that a borrower that is qualified to purchase a $400,000 home at 3% interest may really only qualify for a $350,000 home at 4%. So as you can see, this is a huge deal when you consider all of that supply and demand stuff we learned about in high school economics. So what is impacting our real estate market? Well, the Fed has been propping up the real estate market by its purchases of treasury bonds and mortgage-backed securities for many years. When they buy these, it causes interest rates to fall. However, doing so fuels the economy along, and an overheating economy creates other problems such as inflation. So they really have to balance how they handle these purchases. In November, they decided to taper these purchases, and then in December, they decided to double the pace of their purchase tapers. In other words, buying less of them. So although these purchases don't necessarily have an immediate impact on our rates, the impact typically shows up in a month, maybe a couple months. This is why so many anticipate further rate hikes and why we anticipate a cooling overall market in the next year or so. Unemployment is another factor that has an impact on our real estate market. Although the government reports that unemployment is down, meaning that more people are working, I'm a little bit confused by this. Everywhere I go, everybody's looking for help. However, more people working surely means that more people are buying homes and selling homes. That's a good thing. The next one is inflation. This is really the biggie. Inflation, or the cost of goods and services, is really what's driving the tapering of those bond purchases that I spoke of a minute ago. The increasing cost of these goods and services has a direct impact on our ability to repay debt, and it hinders our overall economy really in a big way. The worry of inflation is the primary reason the Fed is increasing the interest rates. So don't think for a minute that you're the only one that notices the increased cost of those French fries. So we spoke about where the market was. Well, let's talk about where it's going. Yes, interest rates are rising and inflation is certainly an issue. However, even with several interest rates hike, which will likely be very modest, there still aren't really enough homes on the market to satisfy demand. Plus, these interest rates are typically done gradually, so investors and people like you and me don't freak out. Of course, some sort of crazy health, economic, or military event could cause all this to change, but I really don't see it happening drastically without one of these events, and I don't hear that in any of the news I'm reading. As such, while I do see things slowing, I really don't see any reason to have concern for any major changes. If you're thinking of buying, I would do so sooner rather than later simply to capitalize on the lower interest rates. If you're thinking of selling, I would do so now because there are still more buyers that could qualify to buy your home today than there will be tomorrow when the rates rise. We know with almost certainty that interest rates are on the rise. While many speculate that home prices will come back down, I just don't know that that's happening. The sky is not falling. I don't see crazy interest rates changing happening or the next variant of COVID shutting down the world. Relax. Even with increased interest rates and the latest variant of COVID-19, our real estate market is pretty strong and has a pretty positive outlook well into 2022. What fears do you have about our real estate market? What kind of crazy things have you heard? Please let me know in the comments below or feel free to reach out to me directly. I really am trying to learn this stuff to help provide a better product for you. Also, it would be a great help to me if you'd like this video and subscribe. This way you're kept up to date when new events in our local real estate market occur. Thanks for watching. I look forward to seeing you next time.